Well, to get better insight into those figures, let's cross now to Jameel Ahmad, Head of Currency Strategy and Market Research at FXTM. Jameel, seeing real boost in trading there in Asia. I imagine it's on mostly perhaps back of that news that Donald Trump and Xi Jinping had a good conversation and are going to have an extended meeting this month.
Absolutely. This is what's caused this market rally, and there's a lot of excitement in the markets. Let's put it this way. These trade tensions have been persistent for 1 year. They've really weighed on market sentiment. So we think of it as an Avengers movie or Marvel. The trade tensions are very much the villain when it comes to market sentiment. But this news yesterday that President Trump and Chinese authorities will have an extended meeting at the G20 in Japan next week has really got markets very excited. It's like thought as Captain America and Iron Man coming to the rescue, and investors are really hoping that this will be a resolution because this has weighed on market sentiment and investor confidence for close to 12 months.
Meanwhile, Jameel, we heard the announcement by the head of the European Central Bank, Mario Draghi, saying, that possible measures could be taken if necessary. We may see some rate cuts ahead. How have people been reacting to that? What does it mean?
Very surprised. This is a big twist from the European Central Bank, because we have to consider that it was only 2 weeks ago that ECB President Mario Draghi had the latest interest rate decision, and the ECB stated that interest rates will be kept on hold, policy will be left unchanged until at least mid-2020. But yesterday, that was quite a swerve. That's a very downbeat Mario Draghi that appeared, and a huge contrast to 2 weeks ago. And again, it's because of trade tensions. It's because of what problems, external uncertainties are promoting to global growth. And this is something of a big concern to central bankers because they can't control it. They can't control it directly at all, but it does weigh on economic and market sentiments.
And Jameel, of course, this Wednesday we're expecting news from the US Federal Reserve. Do you think it's likely it will follow in the lead there from the European Central Bank?
Yes, it is likely. We see fireworks coming from the Federal Reserve interest rate decision today. We don't expect the Federal Reserve to cut interest rates, but what the market is very excited about is the prospect of the Federal Reserve issuing guidance that US interest rates will be cut over the coming months into 2020. Once again, because of the concerns over the global economy slowing down, which is because of the stemming concerns over trade tensions. So we do expect overall that the Federal Reserve will follow the ECB lead from yesterday.
OK, Jameel, for now, thanks indeed for that insight into how things are playing out in the markets. Jameel Ahmad, their Head of Currency Strategy and Market Research at FXTM.